Hi there, I'm Teresa Dufour with today's CT Style Express report. With the arrival of the coronavirus in the United States this year, the stock market took a huge dip. Many investors panicked at what seemed to be a major loss in their investment portfolios. Here to offer you guidance to handle whatever the market throws your way is Will Warner. He's the managing member at Sentinel Asset Management. Hi, Will. Nice to see you again, via Zoom, of course.
It's really great to see you too, and thank you for having me on.
Sure, our pleasure.
So let's be honest with ourselves that there's a lot of uncertainty in the stock market today. The fact is there's a variety of uncontrollable factors that can affect the market that you may never see coming, like the pandemic, the housing bubble, the tech bubble, or even 9/11. So the question that your viewers should ask is, did you spend 30 years of saving for retirement just to see it potentially wiped away in a few months?
Wow, it's a frightening thought there. So let me ask you, is there anything our viewers can do to limit their risk?
Absolutely. Relying on the stock market to get you through a retirement is a common mistake, but it's an avoidable one. The key is understanding that gains are not equal to the losses, okay?
Got it. So I've always heard if you think long-term, it might come back. Is that true?
If you're young and you have many years to invest, historically the answer is yes. But what if you are retired or nearing retirement? A huge drop like we saw back in 07 and 08 during the housing bubble could have a devastating effect on your goals in retirement. Imagine the value of your portfolio dropping upwards of 60%. It took people on average 6 years to get back to where they were before the drop. When you're 70 years old or older, that can be your retirement salary for a significant portion of your remaining years in retirement. We call these market conditions fatal fluctuations. They can be weathered if you're adding money to your portfolio, like dollar cost averaging with a 401k, and you have a long time horizon before retiring. But in retirement, or just prior to, they can be devastating. That's why my philosophy is very simple. For those individuals that are close to or nearing retirement, losses hurt you more than gains help you.
All right, explain that a little bit further for us.
Well, absolutely. Okay, you would think that a 10% loss and a 10% gain just offset each other, right? Well, in reality, that's not the case. If you have $100,000 and you lose 10%, you now have 90 grand, okay? And if you gain 10% on that 90 grand, what would that leave you? Well, that would only leave you $99,000. Okay, so you ended up losing $1,000 even though you had a 10% gain and a 10% loss. So further, if you lose 50% of your portfolio, it takes a 100% gain just to get back to even. And it's just even. Now, in the past 20 years, we've gone through a number of fatal fluctuations, such as the dot-com bubble in the early 2000s, the housing bubble in 2007, 2008, and the beginning of 2009. So without the guidance of a financial advisor or a fiduciary, which is a key to find, and some solid financial planning, the future fluctuations could cause you to miss out on your retirement goals and your dreams.
No, it's so upsetting. That's why you should let a professional handle it, of course. Will, so you get to a certain age, you're thinking about retirement, maybe you just retired. What advice do you have for that community of people who see a downturn in the market? How do they handle that?
Okay. Excellent question, Teresa. So here at Sentinel Asset Management, we walk each client through an evaluation process. The focus is on several key areas you need to consider for retirement, including taxes, Social Security, and especially the fatal fluctuations, because they've happened before, they will happen again. It's important to start the process by preparing for retirement and protecting yourself from pitfalls, like those fatal fluctuations, as early as possible. The longer you wait, the more your options decrease. Okay? Financial planning is about choices and knowing what you're going to do today when these things occur. Okay? You owe it to yourself and to your family to find a fiduciary and get professional financial assistance so you can enjoy your retirement years and have a guaranteed retirement income salary in retirement.
Sure.
So right now we're offering our viewers a complimentary personal retirement analysis as part of an overall complimentary full financial plan, okay? So your plan will provide you with important steps to take to maximize your retirement savings so that you can reach all of your retirement goals. We're going to go through 5 key areas: asset management, tax management, risk management, estate planning, and legacy planning. Our viewers may need all the areas, but some of you may just need a few. So if you have at least $300,000 saved for retirement, schedule your free complimentary retirement analysis at 203-793-0707. And based on recent events, we've seen an increase in demand of our retirement services. So call us, we'll get you in, and we'll get you on the calendar.
Sounds terrific. Will Warner from Sentinel Asset Management, thank you for all the information today. And of course, you can learn more over at sentinelassetmanagementllc.com. Getting ready for retirement. Thanks, Will.
Thank you. Bye.